Good evening. My name is Michael with BackToTheFutureTrading.com. Welcome to the third story attic office here at an undisclosed location in North Carolina. Pleasure to have you on board here tonight. I want to show you some things on this chart in relation to a pattern that I developed. I worked out with a customer earlier in the week. I think his name was Danny. And Danny got spooked. He said what I'm about to show you was too complicated. And I'm hoping that maybe you'll be able to take the information I developed for him and incorporate it somehow into your own research. We're going to start out with the Nasdaq, but then I want to circle back and look at Crude real quick and show you some things that I think I've uncovered in regards to that. Okay, so in this chart, we're using the Flux daily cycle marker indicator. And the daily cycle marker indicator has 4 different phases that it tracks. You'll see here there's a little green dot, and that's a phase 1 signal. There's a large green dot, and that's a phase 2. Guess what? The little red dot is a phase 3, and the large red dot is a phase 4. And those repeat like the 4 seasons of the year: winter, spring, summer, fall, winter, spring, summer, fall, perpetually to the right. Those cycles repeat over and over and over again. And in the upper right corner of the screen here, you'll see there's a notification that tells us when the next event is occurring. In this case, another event is coming in 2 days, 7 days, and 20 hours, right? So when I was working with Danny yesterday, I couldn't help but notice a constellation. Now, when I refer to the word constellation, I'm referring to a cluster of price action and daily cycle marker dots that bear a strong resemblance to each other. And I'm pretty sure you'll be able to follow this. Look over here back in April. Back in April, we had a pattern for lower low red dot right here. We had a signal here with a large phase 4 and then a huge wick candle down on the right side of a double bottom. So check out the structure with me. Ready? We had a phase 2, a leg down, a leg up, a phase 4. You see how that looks like a chair almost? Okay, now check out over here where we are currently in August coming into September. We had a leg down and then sort of this, right? Back down into this lower low at the phase 4. So there was a leg up at the phase 2. It drops down into the phase 4. So these signals right here are nearly identical in their position relative to the high at the phase 2, or the high rather at the upper red dot. That's actually a phase 3. Pattern 2 down into a phase 4. Okay, so we see that same constellation, right? The upper left corner is a phase 3, and then we have this double bottom into a phase 4. It happens on both of these patterns. And then what I did was I took a rectangle, this blue rectangle right here, and I'm going to get rid of these up here for now, just because when you see what I do with them, it's pretty important. I drew a blue rectangle that covered the whole height of that candle right here, from the low of that big red dot candle to the high, that phase 4 signal that appears in both of these constellations, right? So when I copy and paste that rectangle, look, this is an identical rectangle. I've cloned it. And now I want to bring it up to this one, and look, I'm going to move it over to the wick of the new candle, that low right here. See it? I'm just going to put it on the low of that candle 4. So let's blow this up, because I really want to drill this point home to show you the power of timing signals, right? The blue rectangle started out back here in March of 2017, and then remember, I copied it and pasted it. Boom! And then I took that signal that rectangle rather, and then I put it over here. Do you notice how big this large red candle is? It's off by what? 816.5 to 823. So it's off by about $7 over how much? 754 to 816. So that's about 50, yeah, about $50-$60. So it's less than 10% difference. Okay, well, that's not the only similarity. Check this out. You'll notice in the April version of the pattern that we then come up and test a high. The market, you notice here how it consolidates for about 5 days, okay, and bounces back and forth. Then we have this yellow box where that consolidation took place. And I'm going to come up here and I'm going to put this yellow box on top of the blue box. Now, your eye should start to see these patterns without my help. Blue box was where the phase 4 took place, that big double bottom where the chair was, right? And the whole thing started with this little red dot up in the corner. We come down to the phase 4, and then it pushes up to the top of this yellow rectangle. All right, now, eerily similar in structure, eerily similar in timing, eerily similar in scale. The number of points the banks are moving inside of these previously noticed constellations of time price movement, right up to and including this sort of day 5 signal. So I kind of let Danny know that, hey, we were looking for the market in the Nasdaq after day 5 to pull back down into the blue rectangle. And I told him this on Monday when we met. And again, this is something somebody thought was too complicated. And I kind of dared him to see that we wouldn't come all the way down into the blue box before we started moving back up to the high of the yellow box and then beyond. Okay, so now check this out. It came all the way up to the top of the blue box, and then today, do you see how it dripped or fell all the way back down, rather to the middle of the blue box? And you can kind of get a feel for where we are in that cycle. In fact, if I put a vertical blue line here and a vertical blue line here, we're now looking at identical patterns from the one to the other. We came all the way up and down. So what this tells me is that when we're down here, once we come down and touch that bottom point of the system, of this pattern, this is as low as it gets. And from that point forward, halfway down the blue rectangle, it's all the way back to the yellow and then beyond. And so we've already clicked. If I got an exact 50% retracement on that box, that was the cock back. That was the loading of the gun. And so I'm just going to come here and I'm going to put a 50% fib. And I understand I'm a little delayed on this, but there's the cock back to the 50% fib. And then up here, I'm going to do the same thing. There's the candle. And if I move that over, do you see how it pulls all the way back to the 50% up there too? The Nasdaq, if we follow these two patterns, will have a tendency to kind of burst out right up into that level. So if I start the pattern here, and I copy that rectangle up over to there, and I put it at the very bottom, just like I did the other one. So this sort of gives me a feel for how everything here may be linked together. And so if I look at this arrow real quick, and again, I'm just showing you kind of off the cuff what I've figured out. From the bottom of this to the top of that is here. And then from the bottom of this to the top of that is here, which on my chart right now is 60.68 half. Okay, just above the all-time highs. And if that's the case, if these patterns are analogous, if the banks are in fact running this play a second time, the bottom is potentially in already at the base of that phase 4 signal. Now, is there a possibility that this thing is going to run down and drop 1,000 points tomorrow? Could North Korea launch missiles all over the world and thermonuclear war games take place? Absolutely. But trading ultimately is strategically analyzing market timing to procure a higher than average edge. And so right now I'm just showing you what I see based on the timing signals that are sort of on this chart. And the pullback already took place. So anywhere down into 57.86 or down into 58.22, these are pullback areas where the banks want people to think, oh, maybe it's going to fall apart. And so the possibility exists now for the NQ to rally back up to the highs at 949, 950, 971 half, and then 997 before coming back up to the top of this rectangle here at 60.66. Okay? There are some reasons to believe that that may be underway. Let me show you what I mean. I also showed Danny this 60-minute Flux histogram chart because he wanted to know on Monday what the NQ had in store. So remember, I showed Danny these charts on Monday. And for Monday, we were predicting the NQ to have buying pressure from 4 a.m. into 10 o'clock on Monday night. And then I told Danny to watch for selling pressure from 10 o'clock Monday night into 7 a.m. this morning, being Tuesday, August 29th. And then I told Danny to watch for buying pressure on Tuesday, today, into 1 o'clock this afternoon, Eastern Time. And you can see for yourself that the prediction we were looking for 4 a.m. on Monday took place. The prediction that I'd warned Danny about on Monday took place for Tuesday. And then all morning this morning, you'll see that we sort of clipped right back up and put in a higher high. But I want you to understand the narrative here. Something very important took place in the NQ. Number one, when it was time to sell, do you notice how they came up and clipped the height of this dot? There was this brief moment of weakness on the part of the sellers. The banks, their institutional traders, the algorithms, it seems like they were losing some of their enthusiasm for the downtrend. And that little peak above was maybe a test to see if they had exhausted all of the people's patience for the down move. Was there still room to go down and get a better price before their launch? Or was this the time where momentum would be enough to let the retail traders drive it up? And you see, that's the very first place where there's a puncture of a selling pressure time. We get all the way down to 7 a.m. and look here. You'll see that it never crosses the buying pressure dot. Here it crossed, indicating some weakness. But over here, it gets close to it, but the banks remain resolved to push price higher. Now, watch the next signal up here. At 1 p.m. this afternoon Eastern, do you notice how we not only punctured, but we broke out and rose through the dot? We broke out and rose through it. This tells me that banks took some profit, but they're allowing retail traders and other institutions to drive the price even higher. This kind of behavior generally occurs at a trend reversal, where you see weakness around the selling pressure times and strength, unopposed strength with resolve at the buying pressure times. And so It's very interesting to see that on a daily chart, the pattern that we were watching for is actually taking place down here on a 30-minute chart, on a rather 60-minute chart. I'll just kind of pull these two things over. So the narrative on the left is confirming sort of this reversal. We have a time tonight, 1 a.m. Eastern into 5 a.m. tomorrow Eastern, and then 11 o'clock in the morning Eastern on Wednesday that we're going to be watching to see, do the banks continue to pierce the selling pressure times and push through them and continue to move with resolve at the buying pressure times? This would tell us internally that the inner workings are still hardwired to push up at these times lately. Okay? Let me show you something else in regards to crude futures. If you go onto our YouTube channel and search for Back to the Future Trading, you'll see that we have a number of videos. And a while ago, I put out a video on oil futures. And at the time of the video, I had pointed out another pattern altogether, right? I had pointed out another pattern altogether in crude using the very same constellation analysis that I had done with you just now. In fact, at the time of the video, I told people that we were looking for crude to fall down into lower lows. And at the time, you'll see we were right here. And this was the 09 contract back, it looks like, at 49.64 at the time I released this video. Now, we got quite a few responses to that video, and people said, no way, Mike, the trend is coming up. In fact, if you read from Spoonman73, he specifically states, no, dude, the trend is up in crude. Well, something interesting has happened in relation to that pattern. In relation to the pattern, I want you to remember where we had that rectangle up top, right? So at the time of the video, the CL10 contract was right around here. Remember, our software, our analysis method told us that we were looking for a breakout and a down move into CL, into CL's lows. And in relation to that video that I just showed you, I want you to see that we have, in fact, followed through and gone down. Okay, so these methods that I teach, the videos that I post, these things that I show, I think they have merit, and it's important that you continue to follow along, subscribe, comment, watch these videos, pass them along to your friends, because I want you to expose the plans that the banks have for these markets. So that play is still in effect. There's a new method that I'm developing, though, that I want to bring your attention to. And I'm just going to throw it out there. I've been working with a new system in determining where market turns are likely to occur. And I haven't fudged anything here. I haven't curve fit anything here. This is a predictive system that I've been developing, and my partner is helping me flesh out. And one of the things that I want to point out to you is that going back 1 year, these are the dates that the method I'm developing told us to look for potential reversals in CL. On candle close, these are the dates that we were looking for. But now, I want you to look at where we are in CL right now. Okay, so I want to pick up where our analysis is taking us. Remember that originally we were looking for a breakout of this area up here and the market to fall, and our original call short was somewhere around this area, right? Around the middle of that block. Well, look at where the method I'm developing is telling us we are in time right now. We'll go ahead and pull this up a little bit. The method that I'm working on right now seems to indicate that we may be hitting an intermediate low in CL, a place where we expect a bounce. Now, I find it particularly interesting if I can, let me see which, I'm going to move the line a little bit to the right here and do the same thing for this one. I find it interesting that we're revisiting this low right here. That swing low. is only 45.55, 46.28. How many ticks away? 73 ticks away. Well within the scope of the daily ATR to get down there. It would, in my mind, thinking like a thief, thinking like a rigged game player. If I were the banks, this would be an area that tomorrow being Wednesday, right, crude inventory report day, this would be an area that I would love to see plunged and then love to panic everybody and then go, ha ha, sorry, and let things sort of accelerate back up, right? So without disclosing the methods behind the analysis that are the analyses rather that are generating these signals, I do want you to keep in mind that the accuracy of those analyses so far for the year 2017 provided this information here, and you can hit a screen grab real quick. But I'm wondering if they don't pull one of these. You see how there's a swing low right there, guys? And then they come and they punch it real quick. Watch this. I'm just going to show you different areas where that stop run takes place. Okay? Clearly they took out a ton of stops over here, but there's no local low to reference. Okay? Here's one where there's a prior swing low, and then the banks plunge down into it to get those sheep all herded, all the retail traders scared and worried and nervous, and then they finally give them a direction to go, and they move obediently to the upside. You can make a case for those kinds of patterns throughout this chart, both on the sell side and the buy side. And you can see those punches above structure, like this one right here in relation to that prior swing high, just coming up above it and then dropping it down. So this area right here is of particular interest to me for several reasons. Number one, when I come back and I look at what happened at the green arrow days that were predicted to be buying pressure times since February of this year, every one of those signals except one has produced a substantial reversal to the upside. Okay. This one here was an abject failure. So my prediction is based on the following pieces of information. Number one, look at the low just to the left of the signal that takes place. Okay, look for these lows and then identify these large wicky candles, right? So for now, I'm going to take away these fib lines just so you can see the signals all by themselves. Okay. And you'll notice that they're in almost every one of these cases, there's one of these large stabbing wicks, right? One of these large probe for weakness drops. Okay. And then even over here, you can see there are some swing lows that we're coming into. Right. So it would seem that if the market's going to go up, that we're looking for a signal above that candle's close. So kind of up above that is safe to take a breakout. Kind of up above this is safe to take the breakout. And you see here how it never gets above that candle. There's no breakout and the downtrend continues. It breaks the low, right? It breaks the low right here. Okay, when it breaks that low, that's the potential for what? When it breaks that low, it's the potential for a trend continuation. So here's what I'm thinking. It didn't break that low over here, broke the high and continued up. It didn't break the low over here, continued higher and stepped up. It did, however, break the low of this signal over here and continued down. It didn't break the low of this signal and continued up, the breakout to the upside. Okay, so tomorrow is a very important day. On the close of that candle, I want you to watch for a breakout above the high of Wednesday's candle or a breakout below the low of Wednesday's candle. If it breaks out above the high, where might it go? Well, check it out. If you look at the geometry of time for these legs and these moves, the geometry seems to suggest a move that's at least that big or this big. Okay, a move that's at least that big or this big. So let's transfer all three of those candles sort of over here right now. All three of those arrows over here, right? So I'm just going to put them side by side, sort of right where the price is right now. Copy, paste, copy, paste, copy, paste. And you'll see when I align all three of those candles together, there seems to be a consensus that if it breaks the high of tomorrow's close, or tomorrow's high rather, that we could go in CL anywhere from 51.11 to 52.42. Okay, again, that's if it breaks tomorrow's high. Wherever tomorrow's low is, if it breaks that, here's what I want you to see. There's an inverse potential. When it broke this low, it dropped this far down. Okay, when it broke that low, it dropped that far down. And so wherever the low is tomorrow, it has the potential on Thursday, if it breaks that low, to go down at least that far into 41.89.90 area. All right, does that make sense? So CL, remember two things. Number one, we told you when the drop was coming and it came. The patterns also on the 60-minute chart seem to suggest, just like the NQ did, if we look at the 60-minute histogram in Crude, the times that we were waiting for these moves. Today we had a drop down at 11 a.m. The sellers preserved that integrity of the move. They never punctured the selling pressure dot. And then 12 p.m. there's this massive upthrust. It comes all the way down to 45.76, straight up into 46.54. Now look here at 4 p.m. Do you see that little tickle right there, how it comes above the red dot? These are precursors to trend reversals. They start to appear right when a trend is coming to an end. And when you see instances where the green dots are not violated, but the red dots are starting to be punctured, that is one of the warning signs that the banks are reversing commitment levels in their algorithms and their program trades and all these other things. They're letting signs of slivers of light, little cracks are starting to emerge, right? And these buys are coming in. It's sort of like just when a popcorn machine, those very few first kernels, that's what you're sort of seeing, that initial pop-up. Hey, boss, is it ready? Are we going to screw all these guys yet? Hang on. Not yet. We're not quite panicked enough yet. So in the overnight session tonight, I'm looking for it to go above 46.57 before 9 o'clock tomorrow. And that would indicate, again, we're above this level here, this last selling pressure candle dot. There's nothing magical about the dot. It's just something visual that I use to notice we shouldn't be up here if the banks are selling. Why are we creeping higher? Right? It's like someone's holding a rope and that rope is slipping through their hands and going up and up and up like an elevator or a block and tackle that you're holding. Right? The rope is starting to slip and this thing is moving. The rope is moving away from you higher and higher. So if this is in fact the uptrend, the reversal in CL, I expect it to come back above 46.56 into 9 o'clock tomorrow. And then I see 9 o'clock tomorrow has buying pressure, 12 o'clock tomorrow has selling pressure, and then chop into the 7 o'clock hour Eastern time tomorrow. So keep those things in mind when you're looking at the CL daily chart here, that there are symptoms and signals that tomorrow may be a pretty important day. The high and low of that signal determining which side the breakout occurs from and which direction, either down magenta arrow or up green arrows, we may be headed into next. In addition to that, again, just a reminder, as you're watching the NQ charts, check and see if those same things we were talking about don't come into play with those patterns that we were looking at right there just a moment ago. And keep your eyes on those rectangles too, and see if we don't start breaking out and moving away to higher highs. If it comes below that orange area here before it breaks the high, this thing has the potential to reverse and fall that far that fast. So you can almost reverse the rectangle if we come below that orange line before we hit the high. If we come back down here and touch the low at 57.51, that 57 low 50s area, this thing could reverse and go the other direction completely down. Okay, but as of right now, all indications seem to be buying pressure from 879 down into 787, with the potential to go as high as 60.66 if these patterns repeat. Thank you for your time and attention. If these kinds of methods and analyses, peeling back the layers of institutional malfeasance, people rigging a game and you thinking that it's fair, appeal to you, if you want to expose these patterns to the light more and more, please join us. You'll see some links down below in the description of this video for our weekly webinars, where you can come and learn about software we've specifically built for you to help understand what times in the future to look for these moves to occur. I'm Michael from Back to the Future Trading. On behalf of everyone here at the company, appreciate you. It's a privilege to bring these videos to you. Please share them. Please like, comment, and subscribe down below. Let us know what markets you want me to look at in future videos and whether or not these videos are helping at all. Thanks again, everybody, and take care.